The market today is trying to go higher, and let's talk about it. What we can see here is the S&P 500 trying to find support around its previous low. The same thing with the NASDAQ, a little bit more timid, but trying to make a push higher. Same thing, you've got the Dow Jones higher, and even the Russell eking out just a slight green candle here on the hourly. Gold, however, looks really strong here, making a push nicely back towards the high of today's range at the time of recording this. The jobs data today continues to cause the dollar to slide, however, we'll talk about that in just a moment, and you have Bitcoin making a break back into the 90s. Are the markets ready for a Friday reversal, or are new lows coming? Let's talk about it in this video. As we get started with today's video, do me a big favor if you could, hit the thumbs up button. It really does help to support my content, and it also lets YouTube know that you want to see more of my videos, so it's a win-win. Gold is making a nice push off of this weekly kind of low here. What you can see is last week we had the capitulation move into the Friday close, followed by a strong opening on Sunday and follow through on Monday. We've gone sideways for a few days, but if we drop it down to the 4-hour chart, at least at the time of recording this, we look poised for a possible move higher. Let's see if price can start to establish a foothold above key levels of structure like the previous high around 2950, and perhaps that could signal that big move that I think we still may see up to 3,000. Now, of course, that's what I think right now. Things can change, and there's reasons that I have a stop loss on my trade. If this market completely flops and we drop through the lows, I'll stop out of the idea. But right now, gold looks really good, and I also like the prospect of TLT. This is bonds as well, which have been bouncing here recently, but I think have more room to continue higher. Let's talk about the jobs report that came out this morning. So NFP came in this morning pretty much in line with expectations. It was a slight miss on the print, just a little bit soft. Not enough to freak out the market too much, but also not the kind of jobs data that we were looking to save the week in terms of the S&P 500. That softness was not just on today's print, however, though. It was also revisions to last month's print. What you can see here is that the yellow line, which is very important that we focus on, revisions for the jobs data came in a little bit softer for the month of January's data, right? Each month we report the previous month. So we just reported, of course, February's numbers. Well, January's numbers got revised down as well. And setting your politics to the side for a moment, the efforts of Doge have not really started to make their way into the monthly NFP report. If larger government layoffs do start to occur, it's possible that some softening in the labor market may continue to be a theme going forward. So to give a high level report on how this jobs data print went, was it an F rating or an A+ rating? I would give it somewhere in the middle, probably like a C+. It wasn't horrendous, but it definitely wasn't a great grade either. But with the S&P 500 sort of oversold here recently, perhaps this was all it needed for the short run just to catch a little bit of a bounce. At least the numbers were not horrendous. And in a market that is in kind of free fall here recently, that may be all it takes to get a short-term bounce, especially when we've been discussing on the channel the 200-day moving average being tested. Possibly this level holds as support, but the bigger question would be, can we actually recapture some areas here to start to resume a longer-term climb? Well, probably some big things on the headline side would need to change. We would need to see some concessions on both sides with the tariffs. A bit of de-escalating there might get you there, but right now the jobs print at least seems to be holding us steady where we currently sit. That being said, by the time I have this video edited and published on YouTube, we could very well be in either direction a big push. Again, what I want to iterate, somebody teased me on my last video. They said, well, Nick, you basically just said it could go up or down. That is fair, but let me give you a little bit more of a granular answer. With the S&P 500, technical wise, I'd be looking for a breakout here above 58.80. If you can close above that, to me, that would signal that we may have short-term bullishness coming into this market. And if we continue to break structure back into 6,000s, I would say we look straight up bullish. However, if you break and close decisively underneath yesterday's lows, that would be a very bearish signal, in my opinion, for the short run and could signal further downside to come. When it comes to gold, I am currently still long. I'm trading GLD. This is the ETF that I trade to track the price of gold. As a US trader, my options for trading gold are a little bit limited. I could trade gold futures, but I like ETFs because I can also do some option strategies, and I also just am more familiar and like trading stock ETFs more than anything else. But anyways, I'm long gold. We had this big gap open this week, filled that gap, went sideways, and still look very strong. I think gold is headed back to those highs and beyond. If I'm wrong about that, I have a stop loss to tell me that I am wrong. Let's talk a second about the dollar, which also sold off and continued its selling here recently on the jobs print. The other thing we need to mention is that unemployment rate actually ticked up from 4% up to 4.1. While we're on the topic of currencies, the euro has had a really impressive push to the upside. We actually see it breaking through resistance here, perhaps a little bit of a rally around the euro following the German DAX having really good performance recently. We see it down slightly right now, but compare that to the S&P 500. You can see the German DAX has been, foreign investment seems to be flooding in at this time into the DAX. Very interesting stuff right now. But again, the euro kind of a big beneficiary there. Also the UK, the pound seeing some strength. We could also equate that to the UK economic heat map, which looks a little bit better than the US right now. Now, again, I don't want to say that the US economy is weaker than the British economy. That's not what I'm saying, but the UK economy is at least surprising analysts slightly better than the US. There's a big difference. I'm not saying the US economy is weak. I'm saying that it's missing on some of the expectations. We would call this soft prints compared to forecasts, whereas the UK and Europe might be holding up just slightly better in terms of the analyst expectations compared to what actually comes out. Later today, the commitment of traders data drops, and I will be very curious to see what institutional money was doing this week. Now, again, every Friday we get information on what institutional money flows bought and sold in the market. And yes, that includes things like gold, the US dollar, the NASDAQ, the S&P 500, the euro. All of the data will come in, and fresh data will show up here into the Edge Finder this afternoon. So I'm definitely going to keep an eye on this, and if I find anything interesting, I may share it on YouTube. I'll also keep a close eye on the COT data history tab to see if there's continued accumulation of things like the US dollar and if gold buying starts to resume again. The other thing that's been really interesting that I've talked about on my channel quite a bit is the accumulation of Japanese yen. We'll see if that can continue. The put to call ratio also got a lot more extreme to the upside here. What that signals is that there was a big rush recently into buying puts. Puts, of course, are bearish bets in the stock market, and people clearly are still very scared. As we discussed in yesterday's video, but I'll repeat here for maybe those who didn't see it, the AAII Investor Sentiment Survey is still signaling that investors and traders alike are feeling very scared about the stock market. And even if you don't trade the stock market, that is an interesting signal to general market consensus. We seem to be in a much more risk-off environment where things like the Japanese yen, bonds, and gold may look a little bit more attractive. That's been my call in the last several weeks and has been one of my better ideas in 2025 so far. Part of the reason the dollar is down and why, of course, bonds are up is because bond yields are actually kind of down on the day, at least at the time of recording this. Again, these markets are so volatile. By the time we hit upload on this channel, stuff is moving like crazy with high volatility, which of course we can take a look at in the form of the VIX. The volatility index up at 24. Markets are moving pretty aggressively, whether up or down. However, just taking a look at this objectively, I am selling puts on several stocks that I like because generally speaking, when the VIX gets elevated, options premium starts to get really juicy. And as an options trader myself, I love to sell bets to other traders when the market is expecting massive moves, because historically speaking, a lot of times, not always, and you can get yourself in trouble with this, but this is my thought. Generally speaking, when the VIX is very high, people expect massive moves in the market. And oftentimes those expectations exceed what actually happens in markets. So just to give you some examples of things that I'm currently trading, I've sold some puts on several stocks that I like that are currently out of the money kind of puts. If the market continues to go lower, this will give me a chance to actually buy shares of companies that I like at discounts. And if the market bounces, I'll make a nice little premium on the trades themselves. Here's a quick look at the latest top setups algorithm. You can see gold, silver, the pound, Euro Aussie, pound Aussie, Euro dollar, pound and Kiwi. These are some of the most, and the DAX, some of the most bullish assets on the Edge Finder at this time. And if we flip things bearish, you can see there's still preference for yen crosses to the downside. Dow Jones also getting some bearish readings, and the Russell continues to get one as well. Interestingly, dollar Swiss, we're getting a lot of bearish signals on the dollar in the last few weeks, which has been really interesting and quite the call. But again, my continued favorite on the list is the very first place top bullish setup, which is gold. Also silver I like quite a bit. And looking at the pound, but gotta wait for pullbacks there personally. The top setups algorithm allows traders to quickly at a glance create a watch list here through economic data like jobs data, NFP, CPI, all those key metrics. It automatically calculates scores for each thing and then creates a technical, economic, and sentiment total score to create an overall bias for our favorite currency pairs, indices, and commodities. And today is your last call on the Edge Finder discount opportunity that we are currently doing on our website. You can currently get 30% off the Edge Finder using the link and promo code in the description down below. For traders looking to take their fundamental, sentiment, and technical analysis to the next level and to find more trade setups that are backed by data, check out the Edge Finder and consider it while the sale lasts. Again, this will be ending very soon, and it's a great opportunity to pick it up on a dip. If you have any questions, you can also send us a direct message using the first link in the description down below to speak directly to a member of my support staff. Through our powerful data and tools, we have helped many traders take their trading to the next level, work towards getting funded, and just simply add more context to the fundamental side that most traders seem to be lacking. Don't miss the opportunity. Pick up a copy before the sale ends. Fundamentals lead, price action follows. And some people really hate when I say that. But again, that is genuinely how I feel. And I think it's important that, if I'm going to be, you obviously feel the same way, Kenzo, but it's really, it can be frustrating because fundamentals are very complex. They're very difficult. So people don't want to hear that, oh my gosh, markets are difficult. That's not fun. They want to hear support and resistance is all you need. It's really easy, right?
Yeah, I think sometimes it's been, to be honest, the way we start to learn the markets, we get fed this type of information that everything is technical. But if maybe you want to make it simple, let's say maybe we say Apple as a company, what makes it to move? There must be reasons why it's supposed to go up. They have few products which are selling very well. They have upcoming products. If they stop, obviously there's nothing's going to happen. Even the government is like that. So the economy is like that. If there is ins and outs that are going on in the economy, that means the economy is surviving. Whether it's positive or negative, that helps the market to move up and down. So it's actually transactions happening, but mostly they are fueled by economic events. Are we thinking that maybe it's going to be positive in 3 months? Are the things going to go bad? And that makes the market to react. Then after, just for us to understand what's really happening, it's where we're going to come with the lines and throw 1, 2, 3. But at the end of the day, it's actually the actual events that are actually happening in real life.
Yep, exactly. And again, somebody in the chat says it is indeed a tough truth to accept, Nick. Look, I'm not saying, and I'm not here, and I don't think Kenzo is either, saying that technicals are useless or that technicals are silly or a waste of time. That's not what we're saying. We're just saying that it's a little bit silly to completely think that the markets don't trade based off of fundamentals when they absolutely do. I mean, your point about Apple is perfect, right? Here's a real world company. There are employees that work at Apple. They get stock options as part of their employment. And then, executives get a paycheck out of the company earnings. And, those are real world forces. People on the streets are all using iPhones, or maybe they start switching to Samsung phones. Like, those are real world forces that impact the stock price. The stock price impacts the overall stock market index. The overall stock market index impacts the U.S. economy. The U.S. impacts the whole world. So it all is this like big financial system, and it's pretty incredibly complex. And it's not always a fun truth to accept that. Look, fundamentals matter quite a bit, and that there's so much more to learn. I was actually on the way into my office today just thinking to myself, Kenzo, is like, I've learned a lot about fundamentals. I know you have as well over the years, but it would be silly of me to say that I think I know everything about them. I'm constantly learning more about the financial markets, and it's why I love what we do. There's always something new to explore and to learn.
Yeah, I don't think you can actually get it right 100% at once. So we always learning, the ecosystem always changes. So we also have to adapt to the new reality because things change. So now we have to understand AI, and that also fuels the market. So it means now it's different from 3 years ago. So obviously you can't learn everything at once, and you will never stop. You can't get it. There's no way that you can say, okay, I got it. Now I'm going to stop. Then you just get it right every time. So every day it's a different day. It's a different learning, and we just keep doing like that. And it's fun once you start to understand some of the basics.
Yeah,
And especially for us, or for me, who's not coming from like a background of economics or something like that, it's easier
same.
for me just to keep learning tariffs. What are these things? Tariffs, or it's
Mhm.
custom tax. Then it makes it easy for me to keep learning, and you just trying to push more and more. And it way much better if you also make money on the market. Simple as
Yeah.
that.
Well, and yeah, I mean, Kenzo, I too don't come from a finance background. I went to school for software engineering, and
Yes,
just, absolutely fell in love with learning about the markets. And it is an incredible thing. The markets. Here's one thing I will say to everybody listening. If you're somebody who thinks you can call out what the market's going to do all the time, you can't. The markets are very, very difficult to predict. Can you make educated guesses and good risk management and technical analysis and fundamental? You can do all of that stuff and sometimes still get it wrong. But again,
exactly.
what learning every day from the markets, like Kenzo is discussing here, like what we're talking about, I think starts to humble you. And that humility, um, look, I'm talking. I could be arrogant in other ways, but what I'm talking about in the markets is that
Mm,
not knowing everything and constantly learning puts you in a state of, okay, the market is way bigger than I thought it was. It's way smarter than I thought it was. And for me to
mm.
survive in this, I need to humble myself. And what that equates to is I need to size down my position sizing. I need to wait for proper setups and really do my homework and research before I go throwing trades around. Once you accept, again, everybody who's listening, if you can accept that you're not going to just kill NFP and it's going to be easy. Like once you can start to accept this market thing is really, really smart and it's a difficult place to take money out of. Once you can accept that and respect the market for what it is, it starts to get better. You start learning things and you say, look, I am a student of the market. I'm not the market's master.
Exactly. So it's actually you are 100% right, because at the end of the day, it's like you start to have this new mindset, or maybe we can say psychology or trading psychology. So whatever that, mostly when we start with the market, we start by acting like we know it all, until it humbles you to a point where you start to see, oh, I have to have this type of a mindset to actually to be consistent. Everyone can make money in the market, but not everyone can be consistent. So that consistency needs your trading mindset, or let's say mindset in general, and slowly create that habit to be humble, to understand that, oh, I might be wrong every day. I might be wrong. So I have to be, not like I'm not, you don't try to act like you know everything. So that actually helps also.
Exactly. Well, Kenzo, one of our best conversations, I would say. Really, really important stuff. The lesson of humility. I know that sounds like kind of general trading psychology stuff, but generally, or genuinely, what we're talking about here is very important stuff. Understanding that the market is very smart, and respecting the market will take you very far. It will change your mindset, and it will encourage you to start doing the things that will make you ultimately a continued student of the market, but potentially a profitable trader as well. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.